Hello everyone, how's it going? So in this video, we're going to be talking about Illustrator trading under the ticker symbol ILUS. Now, we're going to be talking about how the stock is doing recently, if you should be buying it, what are some of the possible uptrends, upsides, and also pitfalls. But before that, let me ask you this. Do you still remember the good old days of the startup Wild West? Not just the dot-com boom, but back in 2020. Do you still remember a company called Ideanomics? And do you also still remember Kathy Wood and the sacred disruption? So if any of these sounds familiar or vaguely familiar, as you have seen that keyword somewhere on an online article, YouTube video, and so on, and more importantly, if you do believe that at some point in the future, this kind of stock will take off, then please keep watching because today's video is definitely for you. Okay, so now before we begin, another thing, regarding companies like Illustrator or Illustrator, it's very important to do your own homework and to assess with a good, honest, hard look at your own portfolio how much you can spare to invest in this kind of company if you can afford to invest in that kind of company. My video, and in my opinion, most videos talking about stocks or articles talking about stocks, they are just opinions and for entertainment purposes to cover our own backs, right? So of course, talking about a small cap company doesn't mean that you should be buying it. It also doesn't guarantee any sort of results. This is just our educated guess or our own due diligence. Now, with that being said, let's start with the actual video. Technology is probably one of the most significant catalysts to push the economy forward. And more importantly, technology is also something that's one of the most reactive catalysts for stocks, right? So far, disruption and technology advances have mainly been associated with electric vehicles, big data, fintech, this kind of stuff, but rarely on more pragmatic matters or topics like environment or firefighting. And this is where Ilus starts to shine, in my opinion. This company has a whole suite of vertically integrated companies with that topic on mind. So does it mean that a company is going to be entirely dedicated to firefighting and every single company is a component of a bigger machine? Of course not. It's not that integrated. But you can clearly see that its companies are working towards the same goal. Okay? And this is not unlike Ideanomics in that sense. So Illustrator is a holding company. Their value is in like the integration and also the intrinsic values of the companies that they themselves buy, right? And in that sense, it actually took me by surprise in a good way to see that this company is actually dedicated to this one general direction. Of course, it doesn't mean that this company will only focus on that one single topic, but that general direction is promising in at least one way, which is the following. At the time, global warming and environmental issues are having more of a presence in our daily lives. Okay, so being able to firefight efficiently environmental disasters is actually something that a lot of like social stakeholders or people with this capacity to change anything will start to think about. So with a recent acquisition, it has also further strengthened its capacity to innovate and to develop. And this, yet again, is its upside, right? This is a holding company with a very clear mission, and they have bought a lot of companies that work towards this general goal of environmental protection and firefighting. So these are the upsides. I also want to touch on the downsides, or at least the things that we should be thinking about when going in Illustrator. And in fact, not even just Illustrator, but companies like this. Remember I talked about Ideanomics? Well, here's 2 words about this company if you're not familiar with it. I've covered Ideanomics for a couple of times before. And every single time, it's not just because the company is interesting, but also because a lot of people are interested by it, right? That was also the other fundamental goal, or reason rather, why I was covering the company. It's basically a holding company which plays on whatever that is the interesting gimmick of our time. What do I mean by gimmick? Well, essentially, every few years, there will be some buzzwords that are very popular with investors. Back in the late 90s and the early 2000s, it was the .com company. So anything with net or internet or, connectivity or that kind of stuff, they may take off. And then, as far as I remember, it was like financial stocks or real estate stocks. And then it was crypto. Then it was fintech and so on. So these are the trends that govern where the interest of the shareholders and the stakeholders will go towards in a market at any given point of time. IDEX, over time, it went into streaming platforms, it went into fintech, and now, last time I checked, which is, a couple months ago, I should maybe do a follow-up on Illustrator, by the way. But generally speaking, nowadays, it was in electric vehicles. So IDEX bought a few companies that are in electric vehicles. By vehicles, I don't necessarily mean cars. It's more like motorcycles. Anyway, so that is the interest with IDEX. At the time, I wasn't really hot about this whole idea of going all in a company like this, mostly because, one, it's a relatively small cap company, albeit much larger than Illustrator. Okay, so that's also something to take into consideration. But a lot of people were like, you know what, you're missing out. This company dumped, a lot of money into producing EVs. It's going to take off. It's going to take over the world. It's going to go to the moon and so on. And then 2021 occurred. And then 2022 occurred. You see what I mean? So we're again, this video is about Illustrator, but I want to make this point that this kind of company, they almost have a certain tendency of going through a lot of volatilities because they are holding companies whose value is in which kind of purchases you can get. So this is one of the things that we definitely have to remember going in, niche, disruptive holding companies. That's one thing. So Illustrator is a very small cap company. It's even more vulnerable to the surrounding temperature change. Sometimes it's not even like something bad. You see what I mean? It doesn't even have to be a recession, even though we're probably already in a recession, by the way. It just needs to be, a switch was previously 1, it's now 0. And then no one noticed it. But before you know it, this stock began to have a lot of volatilities. Like this kind of stuff will occur more often with small companies. So this is why you really have to check about the entry point, if you're comfortable with the price, if you're comfortable with the risk profile, and so on. The other thing is that, we talked about how the niche or the industry that it seems to be focused on is very interesting, it's very noble, it's very useful, it's meaningful. It's also very niche. It's also a place where not only the offer and the demand, the current offer and the demand seems a bit, full. It's also occupied by, I'll admit, probably less efficient, probably less innovative, but more established commercial partners for the local firefighting departments or people with the rights to spend money to buy firefighting equipment. This is the kind of worry that arguably when Workhorse was going through their bid to get, I think it was US Postal, something like this, the US Postal fleet change, right? Again, this is also a little bit similar here, because at the end of the day, the client of Illustrator, I think, is mostly going to be C2C, or rather business to business. I was going to say corporation to corporation, but no, it's business to business, B2B. And this is where things can get a little bit tricky, because corporations don't think the same way, or rather, sorry, I was gonna say government departments, not corporations, even though a lot of them might be like, public corporation managing a certain fund to buy those equipments. So I didn't mean, completely private enterprises, for the simple reason that most fire departments around the world belong to the public sector. And that kind of stuff, it's both a lot of the eggs in one basket, and the basket tends to move very slowly. So you have to wait for a bit of time before you realize that, oh, this basket turns out to be broken, right? And then I lost maybe half my eggs. Or this basket finally made it to the final, not the final, but the destination, and you've been able to yield a handsome profit. Like, it takes a long time to concentrate a lot of resources and energy into this one single play before you realize if you can get a good deal on this thing or not. This is unfortunately a reality when it comes to public sector. Okay, so to definitely keep that in mind. I don't think that we are in that stage just yet. I don't think that Illustrator is currently actively looking for the local firefighters and to see if they're interested in changing their equipments and so on. So, we're not there yet. And by the way, before I go further, I almost forgot. Recently, I did a video on ENDP, Endo Pharmaceutical Company, or Endo International, and I've misread completely their key article about, Chapter 11 and so on. I thought that the company was going to go through that process, whereas it does not. So if any of you watching know that Illustrator doesn't really rely on like the firefighting side of the business. In other words, they don't need to go out and to start looking for people who are actually buying that kind of stuff. Please let me know down in the comments. Like, I would be interested to know what kind of revenue stream or what kind of venue, what kind of platforms they expect to make their sales on. At the current point, it seems like there isn't a structured answer to this. I think that the company is still in the acquisition and growing phase. By growing, I mean growing its own balance sheet, both with the equity collection or the equity raise, and maybe sometimes debt. Okay, so that's how I think that this company will grow in time, and this is the choice that it is making now. They're not asking this question yet. Actually, we're going to talk about maybe my speculation on how they're going to be doing it later. But for now, let's just keep that in mind, right? This is a very specific niche with possibly like more established commercial partners already in play. So they have to carve out their own path. Now, let's talk about the team. The team seems sincere and very seasoned, clearly with tendencies of going overseas, with very specific areas where, they seem to have a lot of money. And in my honest opinion, even though the CEO proudly puts, all his former ventures on the website and on LinkedIn, I'm not sure that these by themselves are necessarily enough to prove anything, or if that's even the goal. Maybe that's not. But nevertheless, I would say that this gentleman has been a hustler, right? He has been an entrepreneur for well over a decade at this point. And I would say that he's probably a good seller. He is probably someone who can make who has a lot of contacts. Whether he has the foresight to see what's going to happen, 5 to 10 years from now is another question. And frankly, I'm not entirely sure that we would be having this conversation 5 to 10 years from now either, right? Because remember when I talked about Ideanomics, what are the odds that we're going to keep talking about that company 5 to 10 years from now? Barely anyone seems to be interested in it 24 months down the road, okay? So this is why this might not be entirely relevant for a stock play such as Illustrator, but it's also something to be kept in mind. The remainder of the team is definitely very seasoned. They seem to be people who are very good at what they do, which seems to be creating commercial opportunities in those overseas markets. Like if you see Dubai, if you see India, if you see, I can't remember if they have, Hong Kong or Singapore. Those are places where that the local, whoever, like the local government or the local responsible person for the fire departments has a lot of funds and they don't always know where to spend it. As long as you have the contact, yeah, you can make a lot of money with this. So with all that being said, what is my overall approach with Illustrator? I think that this company has a stock price that's very depreciated at the moment. And that if anything were to happen in future, it would be something that's going to be significantly positive for the share price. So what am I saying is there's no indication that this company is going anywhere at the moment, but this is already reflected in the stock price. So what if at some point they actually land like a very big contract, or they announced that they've landed a big contract, or that they announce that there's a lot of interest in whatever they're doing, right? These kinds of things can have a very massive reaction in the market. Not only because it's a significant fundamental news, but it's also because the company has a very small market cap. So anything can sparkle like a very wild movement, up or down. And in that case, I think that given that the price is so low, it's not going to be down. It's probably going to be up. When and whether that's going to happen is a completely different conversation. I'm not sure that it will necessarily, I'm not sure that it'll necessarily happen just overnight, right? Nor do I expect that a thing will happen overnight. But it's something to think about. It's something to remember. So with that being said, we just have to hope that things are gonna turn up well for the company. And either way, if you want to buy in Illustrator, it's not gonna cost you a heck of a lot, right? We're not talking about Pepsi. We're not talking about Palantir when it was in the high 50s or the high 30s. So you don't have to do a leap of faith. It's a small step of faith, or it's a small step of half faith to get in. Now, for what kind of investor is that stock for? It's for the people who don't mind the fact that it's a pink sheet company. It's for people who don't mind that this company is very small, that it may go to zero, that their portfolio is very diversified enough to stomach this kind of marginal position. Okay, I would say dedicate maximum 0.5 to 1% of your portfolio's capital to this. Of course, if it's payload, then it's a smaller payload than if you went in at 50%, granted. But it doesn't really mean that you should be investing 5% or 10% or 50% in that stock, because I really don't think that you should be living with this kind of volatilities. So if you want to buy this kind of company, definitely think about how much you can afford to lose, and then go from there. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings, which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect in investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up, or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.